CRCL is in a short-term bearish trend. Its 10, 21, and 40-day moving averages are sloping bearishly lower. The stock seemed to have found a bottom as of Monday, the 8th of September, and as of Tuesday, the 9th, it got a bounce that was rejected yesterday, the 12th, with a loss of 6.27%. But in the midst of all of that bounce, it actually printed an intraday high of $139.37, which we were going to, which is indeed a rejection, a resistance, an upper projection. Yeah. However, the projections on this daily chart is saying an upper projection below 139.37 is 135.48, and then down projections of 86.78, 56.69. The price pressure momentums of the 10-day moving average and the 21-day moving average are severely bearish, including their derivatives, indicating that even in the midst of the strength, it's been showing of late, setting pressure is still very much in effect. The amount of selling that has occurred, yeah, hasn't changed anything yet. The stock hasn't. The 10-day moving average, these two moving averages haven't. They are not. They're still not trending yet. There isn't enough traction yet. Not enough buying pressure to eliminate what has happened before. What the selling that took place. That I would say that began from the middle of July. Yeah, and yeah, still, yeah, that began because still it's still very much in effect. It hasn't it hasn't eliminated that effect. Even indeed, also some short positions may still be open in the midst of all of this. Let's have a look at the 4-hour chart and see what we have. On the 4-hour chart, no extrapolations. However, we can see that the 200 period moving averages has formed and is now it's bearish. Projections here is not saying anything in anything downwards. It's more of an upper projection. 127.09, yeah, 127.09, just a slight premium to the current levels. Yeah, but however, the price pressure momentum on the 10 and 21 period moving averages are robustly bullish, but they have negative derivatives, possibly because of this rejection that happened on Thursday's post-market session. Yeah, it may have dampened, it may have just you know um, infused the caution there that there is some resistance. It has that the stock, these moving average, or rather the stock itself, has a resistance above, apart from the $127 we have here. There's also here that got rejected. Yeah, that's the 137. Yeah, that 137 as well. And indeed, a couple of other rejections here: 140, 146, 1.149. A couple of rejections, a couple of resistances ahead. Yeah, so let's just see what's going on with the fundamentals around the stock.
Here's an update on CRCL's near term pressures, competitive landscape, and investor sentiment. Circle faces pressure as insider selling, competition, and macro risks loom. Circle, issuer of USDC stablecoin, is trending downward as traders debate whether its valuation can hold amid a confluence of headwinds, insider sales, looming rate cuts, and new competitive threats from innovative stablecoin issuers. Number 1. Insider selling plus valuation fears. Recent filings show executive and early investor selling, reigniting concerns that insiders may be taking profits while retail continues to buy the stock. At nearly 80x forward EBITDA, Circle trades at a premium valuation that looks increasingly difficult to justify as growth moderates. Bears argue that if USDC's market share continues to slip, the current multiple is unsustainable. Number 2, rate cuts loom over interest income. Much of Circle's revenue comes from interest earned on the US Treasuries backing USDC. If the Federal Reserve moves towards rate cuts in 2025, Circle's net interest income could compress, shrinking one of its largest profit engines. This makes CRCL more sensitive to macro policy shifts than many investors initially realized. Number 3, Hyperliquid's USDH threat. Crypto exchange Hyperliquid is planning to launch USDH, a competing stablecoin. Unlike Circle, Hyperliquid is offering yield sharing incentives to attract users, effectively redistributing reserve income back to token holders. Analysts estimate this incentive program could strip as much as $100 million from Circle's gross profit, even if a modest share of USDC liquidity migrates. This attacks Circle's core value proposition by turning what Circle keeps as profit into customer yield, creating direct competitive pressure. Number 4, Circle's defensive options. Circle could adjust pricing or fee structures, develop new product offerings tied to institutional grade services, or pursue strategic partnerships with banks, fintechs, and exchanges to lock in USDC adoption. The speed and effectiveness of Circle's response will be crucial to preserving USDC's market dominance. Investor takeaway: CRCL's trajectory over the next few quarters will hinge on three critical variables. Number 1, USDC market share. Net flows in and out of USDC will reveal whether Hyperliquid and other challengers are making inroads. Number 2, interest income. The Fed policy will directly impact Circle's most important revenue stream. Number 3, strategic response. Circle's ability to adapt its business model will determine whether it can fend off yield sharing competitors. Until then, CRCL remains a high volatility battleground stock caught between institutional support and competitive disruption, with sentiment shifting quickly on every piece of news.
Okay, so thank you very much for watching this video.